Guys, welcome. Bitcoin with Dinny here. This is life-changing information. I'm going to spit some, well, I'm not going to spit. I'm going to tell you some numbers, okay? The numbers you're probably not aware of if you just focus on the headlines. But I want to tell you what's actually going on behind the scenes with these Bitcoin ETFs. And then you'll understand why Dinny is so positive, okay? Why Dinny is so happy. Welcome to the channel. Nothing here is financial advice. I'm not a financial advisor. Just some dude on the internet having a crack with you. I do happen to run Ireland's first Bitcoin consulting company, and for 4 years now we've helped people to understand Bitcoin, teach them how to secure their Bitcoin so they don't lose it, they don't make silly custody mistakes, and teach them how to understand it and understand how it works so they can create a plan to retire early. And if you stick around, if you subscribe, hopefully I'll be able to teach you a bit too. So do me a favour, hit the like button, and we're going to get stuck in. This is awesome, okay? I consume the information and I just bring it to you and I condense it down and I'm not a numbers person. I don't have time, or maybe I'm not smart enough for numbers. All I see is long-term trends, okay? I'm just like, get the basics right and you can get 98% of the results. So I'm like, that'll do me. I want the easy way. I don't have to spend my life in this. Other people will do all that. And that's fantastic. So, what the media is saying now, and we'll probably see a bit of this on RTE. Maybe we've seen it already. I don't know. I don't really watch it. But Bitcoin ETFs launching was a failure because the prices crashed. Now, I just want to explain this to you guys. Bitcoin coming down 10%. That is what we call a crash for ants. Okay? Little tiny ants. As a Bitcoiner, you're barely aware of that. Okay? Because if you're a Bitcoiner, if you understand the volatility of this asset, you understand that a 10% crash is a crash for ants, okay? But this is what the media will be spinning, and this is the narrative spinning. But of course they're spinning this narrative. Who owns them? So, what's really going on, though, is the Bitcoin ETF was the most successful ETF in history, okay? Bar none. There's been 5,000 ETF launches. The BlackRock and Fidelity ETF both have over 1 billion. 1 billion of Bitcoin sitting in them right now. And they've done that in 4 days. 4 days. So this has broken all ETF launching records. The Bitcoin ETF is currently larger than the silver ETF. So it's already demonetized silver. Silver is a dead asset. It's a silly investment in my opinion. Okay. And Bitcoin ETF is now over one third the size of the gold ETF. Remember, this is in a handful of days. So it's pretty obvious that the gold ETF, if I was a gold investor, I'd be starting to question my investment and start to think, is technology going to steamroll me here? And I know I can hold it in my hand, but the world we're moving into isn't the world where people value holding stuff in their hand. People want the convenience of not holding it in your hand. And where most gold investors struggle is that they can't trust Bitcoin. They don't trust Bitcoin. However, once they actually are educated about the thing, or if they took the time to educate themselves, they realize that you can actually trust Bitcoin way more than you can trust gold. Gold, I can sell anyone a gold coin. They have no ability to test if it's actually true gold. Okay, it could be fool's gold. With Bitcoin, if I send you Bitcoin to a wallet, it lands on your wallet. The Bitcoin network has verified the authenticity of that transaction. And the value of gold, a percentage of the value of gold, is because it has to be audited all the time. That whenever you're selling gold, like I was a gold investor, I went and sold all my gold a while ago. And when I brought it in, I had to leave it there for a couple of days because they had to test it all to make sure it was all real gold. So that's basically added into the price of gold. And it's nonsense. You don't need it. You can't send gold over the internet, and gold isn't scarce because we're going to dig up more every year forever, and we're going to get better at digging up more. And when the price goes up, people are going to sell their jewelry. So that's going to inflate the supply. Whereas the price of Bitcoin, it's fixed. It's fixed and it's finite, meaning nobody can create more of it. Once all the Bitcoin's created, that's it. So it has all the properties of gold, except it's 100 to 1,000 times better at some of the properties of gold. And that's why I don't own gold. Now, so the ETF launch has been a massive success. But the price has gone down. And I want to teach you guys why the price has gone down so you understand this a little bit. You know what's going on and you're able to take advantage of these situations. Okay? I'm buzzed. I'm just finishing up. This is day 6 of my fast. I broke my fast this morning. Had a bit of yogurt, had a bit of blueberries, and a little bit of natural honey on it. It was unreal. I'm going into the gym now, going to get stuck into a nice workout. Then I'm going home for scrambled eggs, toast, coffee. Can't wait. So this is my advice to everyone. Study Bitcoin, okay, so that you can retire early, and study fasting so that you can be around. So fasting for health, Bitcoin for wealth. So why has the price gone down? Well, there's massive sell pressure from the Grayscale Trust. And this is because when you went into the Grayscale Trust, you couldn't come out of the Grayscale Trust. It was a one-way. It was a one-way system initially. But now that it's become an ETF, now you can actually get out of your position. So people have bought Bitcoin at 69,000, 60,000, 55,000. They all FOMO'd in. Okay? And there was huge buying went in there into that ETF. Now they have the ability to sell those positions. Okay? And take what's called tax loss harvesting. So they can take the tax loss and set it against their future tax obligations. So all of these people, obviously being tax efficient, that's what they're going to do. Now, the thing is, when they come out of their position, you can't just rebuy it straight away. The law is, and I'd forgotten about this, but it was only I heard Scaramucci talking about this morning, and it made sense. The law is that you have to wait 30 days. So there's your sell pressure, and you think these people aren't going to buy back in. They've already took a crash. They want to take the tax loss harvesting, but they've got to wait 30 days before they can retake their position at a lower level and harvest all the tax loss. So it's a no-brainer. Okay, so that's partly the reason why the price of Bitcoin has come down in this crash for ants, 10%. And also there's a lot of OTC, okay? Because remember, the big players, the boat doesn't go without them. They pull the boat back. They're able to manipulate the markets in the short term to be able to buy Bitcoin cheaper. And when BlackRock, the largest asset manager on the planet, who literally owns a bit of everything on the planet, everything you know, every brand you know, BlackRock has some sort of ownership in them. Okay? So they are able to take the price of Bitcoin to where they would prefer to buy it. And that's what's going on. But that can't continue. See, OTC trading can't continue. I've done a video on that earlier in the week to explain to you the difference between, normal exchange purchases and why big players will go OTC, and it'll allow them to acquire cheaper prices and not move the market in the short term. So you can go back and check that out. But what's really going on here? Let me take a sip of water. Guys, do your daily exercise. Remember, you got to stretch your index finger out. Any finger you want. You can use your nose or your forehead. Go up to that like button. Press the screen if you can't see it. Find it, okay? And if you can't find the like button, or you're not able to figure out how to subscribe on YouTube, I can promise you, you will not retire early on Bitcoin. Because you need a little bit more technical sophistication. So, do your daily exercise. That's all we ask. I'm going in now for mine. Hit the like button. It's awesome to see all the likes. I get to know the community. So, in 4 days, these are the facts that I got from James from Invest Answers, which is a fantastic guy to follow. He's a numbers guy. He breaks the stuff down in numbers that Dinny doesn't do. Okay, Dinny's just a broad, over 10,000 foot overview. 78,000 Bitcoin have been purchased in 4 days. 4 days, people. Like, remember, there's only 21 million Bitcoin, and some people own hundreds of thousands of them, and they'll never sell them. James came up with 3 key facts. 1, there's only 78,000 Bitcoin, or they're purchasing 78,000 Bitcoin in 4 days. So massive gobbling up of the price of Bitcoin. Most of the Bitcoin now, most people are educated about Bitcoin. Okay, if it was 4 years ago, most people aren't as educated. Some people are, but the cohort to come in, the majority aren't. But that cycle, the 2017 cycle, have all been educated. The 2020 cycle, many of them are now educated, so they know what they're holding. Now, not everyone does. Every day I talk to people and they don't know what they're holding, and they're in it to make 10 grand, and they own a Bitcoin and they're hoping to sell it, at 50 grand or when it hits 80 grand, or they don't know what they're doing yet. But many people do. They know what they're holding. Okay, they know they're holding the scarcest thing on the planet, the most desirable thing on the planet, and the most valuable thing on the planet. A lot of people understand that. Okay, so that means that their coins are illiquid, meaning they're not for sale. Okay, you got to focus on this, because there has been a massive increase in 70% of the Bitcoin now sits in long-term holders, people who haven't moved their Bitcoin in a year or more. That makes this thing really illiquid. And now with the ETF launching, Bitcoin's been regularized. It's an investment asset now. It's going to sit in a portfolio. So traditionally in portfolios, you had 60% stocks and 40% bonds. And that was, like, when I read all the books on investing, that was how you put together your portfolio. That was the Ray Dalio portfolios, Paul Tudor Jones, all these guys talk the 60-40 rule. But now that is broken. Now that's 100%. But Bitcoin has to squeeze in there somewhere, because it's evident now, because Paul Tudor Jones is Bitcoin, Ray Dalio understands Bitcoin. It's evident now it has to get in there. So 60-40 won't be the makeup of the portfolio. There's going to have to be room for a Bitcoin element into that portfolio. And now that it's been regularized by becoming, I suppose, securitized, if that's the right word, and having the ability to create a spot Bitcoin ETF, what this means is now all the financial advisors, all the wealth managers who are ignorant to Bitcoin now have to get trained up on it. So there was a survey done. Okay, it was 4 weeks ago I seen this, so pre-spot Bitcoin ETF launching, about a week out from it launching. And the survey was that 70% of financial advisors didn't think the spot Bitcoin ETF was going to be approved in January. In fact, that meant they hadn't even heard of it. They didn't even know what a spot Bitcoin ETF is. These lads and lassies all have to be trained, all have to be educated, all have to understand Bitcoin. Okay? This is going to take time. BlackRock are going to spend a fortune. Fidelity are going to spend a fortune. Okay? And all the other players are going to spend a fortune meeting these. They're going to have meetings with them all day, every day for the next decade, teaching them about Bitcoin, teaching them that if they're managing wealth for their clients, they need to understand Bitcoin because it has to sit in the portfolio. It's now portfolios have changed. But this is going to take time, and this is your asymmetric opportunity. That's your arbitrage, is the time it takes from the ETF to launch versus the time it takes for the education to saturate, and then the clients to go, okay, I've met my wealth advisor, he's advised me on this Bitcoin thing, I thought it was just digital air, I thought it was just money for drug dealers, I thought it was just a Ponzi scheme, I thought it was backed by nothing, but now all those questions have been answered. Okay, and it seems to be the highest performing asset, so me being a rational thinking person, I probably need to own a bit of Bitcoin. How much Bitcoin am I going to buy? And they work that out. So this happens over a period of months and even years, and that's your jurisdiction, that's your time arbitrage while that situation is happening. And mainstream media and that are probably going to tell you Bitcoin has crashed and the ETF has been a failure, and it hasn't been a failure. It's been the most successful launch ever, bar none. Okay. So this is what you got to focus on. In 2016, slow down, Denny. Take a sip of water. I'm excited to see. I have a lot of energy coming off this fast. In 2024, there's going to be just over 200,000 Bitcoin. 200,000 created. That's all. In 2024, there's just over 200,000 Bitcoins will be mined this year. Remember the figure. BlackRock bought 78,000 in the first 4 days. Okay, 4 days. These ETFs bought 78,000 in 4 days. Like, I hope you can see what I can see. It's called a supply-demand crunch. Okay, and that's why I wore a t-shirt yesterday with a picture of Bitcoin on the moon. Because supply-demand economics have to play out. Market dynamics have to play out. We can have shenanigans. We can have short-term to squeeze out people who don't really look at numbers and understand what's going on here, right? But the reality is the reality. These ETFs are gobbling up more Bitcoin than there is being produced. And I believe Bitcoin's going to the moon. The price of Bitcoin has gone up a lot. And most people are going to figure out that they need to own it. They have to own it to protect their wealth, protect their purchasing power, and even to protect their freedom in the future. They have to own it. But most people are going to come to this conclusion much, much later down the line when the price of Bitcoin is much, much higher, and they're going to be able to acquire a much smaller amount of it for them and their family's freedom and wealth and ability to retire early. So I just want to finish off by talking to you about the gold ETF. And if you do me a favour, share this video, share it out there, share it with people. We want more normal people to see this because they're only reading the newspaper, looking at a clickbait headline and going, oh, Bitcoin, I knew it. Sure, I knew that thing was backed by nothing. I knew it, like my friend said. Okay, when the gold ETF launched, all right, did gold go to the moon straight away? No. I know I've shared the chart when the gold went like this, and then the gold ETF launched, and then for a decade it went up. A decade it went up. It had a massive bull market. And remember, gold was already around 5,000 years. So everyone knew about gold. Everyone understood gold. It was nothing new. Okay? But it didn't go to the moon straight away. When the gold ETF launched, of course, it had a little buy the rumor, sell the news. It had a crash. And then 6 months later, it started a bull run that went on for a decade. Now, if you were sophisticated back then, you knew what you were doing and you knew the effect of an ETF, you would have used those 6 months. You would have went to work, like it would have been your sole focus would have been to go to work there and focus on doing what you got to do. Here we are at the Bitcoin ETF. Buy the rumor, sell the news. We got our crash for ants 10%. And meanwhile, the supply demand economics are not making sense to me. Okay. And I know this price is going to have to correct back to reality of how much Bitcoin is being purchased. And remember, I'm talking about one thing. I'm talking about ETFs in America. That's it. I'm discounting the whole of Asia, which are massive digital asset purchasers. I'm not talking about anywhere, okay? I'm not talking about Saudis or Dubai or all the purchases that are going to go on there. I'm not talking about South American countries having Bitcoin as currency and all the purchasing them and running Bitcoin bonds. Not talking about any of that. I'm talking about the supply and demand economics from one thing, ETFs. And they have literally, what's 78% of 200? What is it, like 35%? They've literally gobbled up 35% of the Bitcoin available to purchase this year, and they've done it in the first 4 days of their trading. Like, focus on this stuff, guys. So, this is how I see it playing out. I see the supply-demand economics. There just isn't the Bitcoin for sale. The Bitcoin are liquid. People understand what they own. They've created their Bitcoin pension plans. Shameless plug, if you don't understand any of this stuff, you're getting this content, don't run into this like a headless chicken, not educated. You will lose your money. I deal with horror stories every single week, okay? You need to get educated on this. Go to bitcoinwithdinny.com, check out my consulting. I will build everything for you. I will make sure it's all secure, and I will teach you as we do it all, and I'll manage everything for you. So if you need my help, go and do it. I'll be delighted to help you, and I know we will outperform you doing it on your own. You doing it on your own is risky. Nothing here is financial advice. Every decision you make, especially if I'm not involved, is your fault. So if you buy Bitcoin, you don't understand how to custody it correctly and you lose the coins or you get hacked or you get phished, that's your fault, okay? Because you didn't educate yourself. It's not the hacker's fault. It's not the person who phished you's fault. It's your fault. Because we have to take responsibility for our own actions, our own decisions. And that's the only way we can be successful. Guys, I hope you can see what's going on here. Thanks for hitting the like button. Let me know in the comments what you think is going on with these supply-demand economics. And I'd be delighted to hear that. And have a fantastic Saturday. I'm going in for the big pump. Feeling good! Vinny out.